Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Markets back open. And of course, another down day. We're getting close to the low. I really think we are. Hopefully, you guys have missed me last week. I'm sorry I couldn't get a video out. I actually lost my voice. I had a touch of that virus. That virus is nasty. Hopefully, nobody else gets that. Anyways, let's talk about the stock market. We're down about, 500 on the Dow, 400 on the NASDAQ. This is kind of the capitulation day I've been waiting for. Look, we've been down 5 straight weeks, and today they're just throwing everything out. They're throwing it all out. They're throwing the Bitcoin out. They're throwing the gold out. They're throwing everything out. They're selling it. This could be the turnaround day. I think this week, by the end of the week, we're going to see a bounce. We're trying to find that short-term low is what we're trying to find, that short-term low. Now, we may be going lower, but we're oversold, and we will get a bounce from here. But I do like this kind of capitulation. I put a little small position on the SPY and the QQQs. We'll see how those play out. Can we go lower? We could go lower. We can go lower, but I like that this is finally looking like capitulation. All right, let's move on to the housing market, the real estate market in general. Let's talk about, commercial mortgage-backed securities, right? Now, commercial's a little bit different than houses, right? Okay, so we've got commercial properties out there. We got office buildings that are completely empty, and most of them sitting about 50% occupancy, right? All right, well, there's nothing unusual about that. That's just how it goes. Now, we got shopping centers, a lot of vacancies. Now, the ones that are left, 33% of those retail tenants are not making their payment, not paying the rent. So what happens to these commercial mortgage-backed securities? You see, there's nothing wrong with these properties. Shopping centers still there, office buildings still there. It's just that nobody's paying the rent. These aren't making money anymore. And here's the thing. Okay, so when you mortgage these office buildings, you get a mortgage on the retail centers. These are not amortized. They're not paid off. They're not 30-year loans. No, they're for 5 years. 5 years. Okay, 5 years on average. Now, I was talking with my accountant, and he's got a lot of people that are in these buildings. They own them, and they have these loans, and these loans come due every 5 years. But he's warning them now. He's going, look, your building is going to be worth about half what it was, when you refinanced it last time. So you're trying to refinance it with it's worth half of what it was before, and you got half the money coming in because it's sitting half vacant, right? So it's sitting half vacant. You got half the money coming in, and the interest rates have doubled. That's called 3 to 6%, right? Okay, so what happens? Well, you can't refinance it. Like before, it was easy money for these landlords. They could just refinance it and refinance. A lot of these buildings, they're just going to hand them back. Now, who's holding these commercial mortgage-backed securities? Who has these, right? Who would be stupid enough to be the bag holder on these? Well, let me think. Well, pension funds. Oh, if you're in pension funds, you're in these things. Your pension fund's going to get hit. It's going to get hit hard. This is not good. This is really not good. Look, there is a big problem in commercial, and people don't get it. People just don't understand that these commercial loans are not just going to roll over. The owners of the buildings, they can't afford the building anymore, so they're going to give the building back to the holder of the note. Now, the holder of the note is either the banks. Banks are in trouble. Absolutely. Our pension funds are in trouble. Yes, absolutely. Life insurance companies, absolutely. These are the holders of these notes, and they're going to get these building backs. What are they going to do with the buildings? Well, they're going to just put them on the market at fire sale prices, 80, 90% down. But these commercial mortgage-backed securities, there's actually derivatives on these things that it's just going to be a domino effect. And this is probably what's going to bring the whole real estate market down, including the housing market. Now, most Americans don't realize that the housing market's going to crash. They don't believe it. They're in denial, and that's fine. In my area, this couldn't possibly happen. Mike, we're getting multiple offers. Well, you are right now. Okay, and that's great. And if you're thinking of getting out, you might want to do it really quick before this whole house of cards comes crashing down. Look, things are staying on the market longer, right? Okay, when I put a property up for sale in my area, we have what's called the coming soon sign. You put a coming soon sign out, and there's even a place in the MLS listing, coming soon. And during the coming soon period, you would get between 5 and 10 offers. Well, that's just not happening anymore. Look at, things are going onto the market, and they're staying on the market. They're staying on the market for a longer period of time. Now, here's what's really fast. Okay, so owners, they're starting to have this, let's call it panic pricing, right? Panic pricing. Okay, so if their house is on the market for like 3 days, they're already dropping the price down. They're just dropping the price down instantly, right? There used to be they'd wait 2-3 months before they drop the price, but these owners, they want out. They're seeing what's going on. They're seeing the house of cards starting to crumble, starting to shake. And when this commercial real estate, the domino effects. I mean, if you think like that stock market's tied to the real estate market, is it? I don't know. Maybe it is. Maybe it is. Believe me, if the stock market crashes, the real estate market comes down. When commercial crashes, the housing market's going to come down. Now, of course, not in your area. I get that. And that's fine. Your area will stay up. Every other area will crash down. Okay, that's always fascinating to me how that works too. But look, it's changed. It's changed. And I've never really seen... Well, I have seen this before, where real estate actually changes on a dime, right? But it takes time to play out because the mentality of the seller. My house is still worth what Billy Bob's was. Billy Bob got $2 million. I'm going to get $2 million because my house is better looking than Billy Bob's. Well, the market's changed on the dime, right? And that herd of the buyers has gone away. And we're shifting from the seller's market to the buyer's market now. And so these properties, they're staying on longer. You're getting these price cuts. Price cuts after 3-4 days. If they don't get an offer, they start to panic. I mean, it's like the first one out the door. Panic at the disco we go. I'm telling you, things have changed. That's all I can say. You can sit there and tell me that, that our area is never going to drop. We're never going to have a crash, Mike. And that's fine. I accept that. You're entitled to your opinion. But my opinion is we've already crashed and the carnage is already there, and soon this starts to play out in the marketplace. I've seen it before. I'm an old guy. You can tell that just by looking at me. Look, I caught that virus thing, but I kicked its butt. Anyways, I'm just going to do a little short one today because you can probably hear my voice is not what it was like just last week, but my voice is coming back and I'm getting stronger. And anyways, get out there. Have a great Monday, everybody. Things are changing. Commercial market going to bring down the housing market. That's my call. That's my prediction. And that commercial market, a lot of trouble. Get out there. Have a great Monday. We'll talk again real soon. Bye-bye now.